Like always, we're going to start off with the speedometers, and we'll look at last year at this time. And last year at this time, the speedometers were looking pretty good. And if you know anything again about the speedometers, they're put out by City National Rockdale. They do a lot relative to a lot of research that we can kind of glean through to see how things are moving forward in the markets and the economy as a whole. And again, going back to March of 2025, you look at this chart right here and you're like, hey, these are looking pretty darn good. Obviously, green is good, yellow is neutral, and red is negative. And you can see very little negative, a lot of positive, a lot of neutral. This is the signs of a pretty healthy economy. And keep in mind that this is really looking 6 to 9 months out when they're projecting and they're doing these dials. So if you watch the news, if you listen to what's going on, even if you were looking at the stock market, you'd say, seems like a lot has changed, and maybe it's nowhere near as good as it was last year. But the interesting thing is, yes, there have been some changes, but ultimately not a lot, not real big changes, and certainly nothing that is indicating that we're going to have a problem this year. They're still projecting out pretty darn positive, especially in a late market cycle here. So things are looking pretty good. The only thing that we're looking at that's negative is the equity market valuation. And to that note, I'm sure everybody's watched the market and has seen that over the last 3 months, 4 months now, that the market is kind of walking sideways. And everybody's like, well, what's going on? Is this going to be a rollover? Well, if you think about market changes out there and the dynamics of what's going on, you really have 3 things that could be happening here really over the short term. The first one is we could have a pretty serious market correction. You know, that's anything 30, 35, 40, 45% down in the markets. The question is that really what's on the horizon based on what's happening in the markets today? And I would say no. And the reason is because the economic outlook is still really strong. So then the question is, well, what are the other 2 things that could be happening? Well, generally speaking, if you have a big run up in the market, you will either have a healthy correction, kind of like what happened in April, actually January to April of 2025, where we took a downturn, came down about 19.4%, and then shot right back up, and then we were off to the races again, and certainly ended up in a pretty good place at the end of the year. So that's one of the things that could happen. The other thing that tends to happen is after a run up, the market will kind of base for a while. And what it's doing is it's trying to get its legs again before it takes off. So think of it like, you know, with the run up we've had, it's like running up a hill. You know, by the time you get 3/4 of the way up, you're like really kind of panting a little bit, and you need to walk around a little bit. And that's what the basing does. It just kind of walks sideways. So look at it like this. Your prices on the stock market are kind of getting out of control. The market valuation is a little bit too high, and the market starts running sideways. Well, your earnings need a little bit of time to catch up. And that's where the stock market at some point says, you know what, we're kind of in good shape right now. I talk about the market as if it's alive. Some people think it is. But as it's coming up and getting closer to the price, ultimately what happens is you'll have a triggering event in the market, in the economy. Could be a good jobs report. You could go into an earnings season that is really pushing out strong earnings. And then all of a sudden, the market takes off again. I believe that's where we're going to be. The real question is how long is it going to base before it takes off? We're looking at still by the end of this year being up between 8 and 12%. And you might say, well, that's a pretty big spread, 8 to 12%. But the reality is it's all based on how long we run sideways. Because if we run sideways to October, not likely you're going to get 12% out of the market. But if it turns around anytime soon, there's a very good likelihood that we will end up 12% by the end of the year.